adding new price pressures to a housing market that was already pricing out many buyers. President Donald Trump's changing tariff policies have rattled markets and are being felt across the economy. The housing market is no exception. Tariffs could have a variety of effects on buyers, sellers, builders, and mortgage brokers. Housing market participants are bracing for increased costs as housing affordability remains under pressure due to limited supply and elevated mortgage rates. Import taxes on materials like wood, plastics, glass, and metals will raise housing construction and renovation costs. Meanwhile, economic uncertainty is driving interest rates even higher, making it harder for lenders to close deals. Lenders are also likely to feel the pinch from tariffs. While less reliant on lumber than home builders, renovators are also facing costs for fixtures, appliances, and plumbing. Tariffs on China could be particularly problematic for home renovators, who import several key housing materials from the nation, including glass and cabinetry, said Eli Moyle, founder and COO of renovation project tracking service Chapter. A lot of the materials that we use in projects, either the finished materials or the rough materials, are directly or indirectly from China, so that's going to affect a significant part of the market, he said. Not everything is being put to the client, to the end of the funnel. The manufacturer takes some, the distributor takes some, the builder takes some, and then the client will see some increase in cost, Moyle said. Brokers, tariff challenges come in the form of fluctuating mortgage rates. Treasury yields have soared this week as investors price in tariff policies. The yield on the 10-year Treasury, which heavily influences mortgage interest rates, rose as high as 4.59% on Friday before retreating slightly. Mortgage rates generally follow the path of the 10-year Treasury yield and jumped to more than 7% late in the week, up from around 6.7% a week earlier. Phil Crescenzo Jr., Vice President of Nation One Mortgage Corporation's Southeast Division, said the uncertainty in borrowing is making it difficult for home buyers to finalize costs. If we're trying to lock an interest rate within the last 4 business days, they could move by 0.5%, 0.75%, for the same cost in a 4-day span. That's pretty significant, Crescenzo said. Chaos triggered by President Trump's moving target tariff announcements has not spared mortgage rates. Though initially a stock market sell-off prompted a drop in 10-year Treasury yields, which in turn pushed mortgage rates lower, that trend has now reversed. The 10-year Treasury yield soared last week, which has confounded many experts. But what's not surprising is that the surge in bond yields has pushed mortgage rates up dramatically. The latest one-week change for each new purchase loan average is shown below, followed by a deeper dive into 30-year, 15-year, and jumbo 30-year fixed-rate loans. Rates on 30-year new purchase loans shot up a remarkable 44 basis points last week, rising to a 7.14% average. It's the biggest Friday-to-Friday gain for the flagship average since June 2022, and raises it to its most expensive level in almost 11 months. National rate averages for 30-year fixed-rate new purchase loans with at least a 20% down payment and an applicant credit score of 680 to 739. Rates on 15-year new purchase loans also shot up last week, gaining a dramatic 54 basis points to end last week at a 6.31% average. That's now above the 2025 peak of 6.22%, and more than a full percentage point above the 2-year low of 4.97% registered in September. Friday national rate averages for 15-year fixed-rate new purchase loans with at least a 20% down payment and an applicant credit score of 680 to 739. Monthly payments are now. To see how much this week's rate increases would impact monthly payments for new borrowers, our tables below lay out the principal plus interest payment for various loan amounts with a 30-year, 15-year, or jumbo 30-year fixed-rate new purchase mortgage. By definition, jumbo 30-year mortgages are larger loans. So below we've run our calculations on loan amounts of $800,000 to $1.2 million. How we track mortgage rates. The national and state averages cited above are provided as is via the Zillow Mortgage API, assuming a loan-to-value, LTV, ratio of 80%, i.e. a down payment of at least 20%, and an applicant credit score in the 680 to 739 range. The resulting rates represent what borrowers should expect when receiving quotes from lenders based on their qualifications, which may vary from advertised teaser rates. Copyright Zillow Incorporated 2025. Use is subject to the Zillow Terms of Use.